In this video, you're going to learn a support and resistance trading strategy that you will make consistent profit this year. So I'm going to make a kind of two description. The first one is a conventional support and resistance. Okay. And the one I will be introducing to you is the opening price support and resistance. So let's take a look at the first one. In the first one, a big zone is drawn. Okay, it's usually a zone that have repelled price in the past. Okay, for example, market came down here, tested this area, went back up, tested this area. So what comes to the mind of most traders is that the area below here is called the support, and the area above is called the resistance. So when price comes back there, they feel is going to hold and they will buy from here. Price move up, move up, move up. When price gets here, they feel that resistance is going to hold. Why? Because it held in the past. So they are going to sell here. Price move down up to this zone again. They are going to buy here as well. And then when price push to this point, they will sell. So the only time they don't buy or sell here is when price breaks that level. For example, let's assume price broke this zone. At the retest, most people will buy. That is if you are trading the conventional support and resistance. Same thing with the support here. If it breaks a retest, most people will sell. That means support has broken, has turned to resistance. And in this case, resistance is broken and turned to support. Now, a lot of people trade this, but for me, I've devised a way to make this kind of concept, support and resistance, profitable. Now, there are issues I have with this conventional support and resistance. The first one, okay, why I don't trade the conventional support and resistance. Number one, it deals with a zone. And as such, it is difficult to create a consistent rule. So one of the rules that I like creating or like making is that how do you know that the zone is broken? All right. How do you know that the zone is broken? Is it if price breaks the wick? Because for you to draw the zone, what most people do is this. So let's take a look at this area here. Let's take a look at. So what people do is this. The way they mark it, some mark it from the body to the wick. Maybe let's assume this is zone. Okay. I have an issue with this. Okay. The reason is, how do I know that this zone is broken? Is it broken the moment price breaks or closes below the first line? Or is it when price closes below the second line? It's very subjective. And it's whenever a thing is subjective, as a trader, it becomes difficult to rely on such thing for long-term consistency. All right. So that brings me to number two reason why I do not trade support and resistance conventional way. Too many touches are allowed. Okay. With this, as long as the area is not broken, traders will keep buying at the support and resistance level. As long as this area keep holding, they keep buying and they keep selling at the resistance level. They keep buying at the support level. But what they don't realize is that eventually what they are doing is that they are building up liquidity. They are building up liquidity, and it's easier to manipulate. It's easier to manipulate those traders because looking at the chart, for example, if I go back to the area I was trading at, I was looking at, yeah, for example, you can see once you keep buying at this level, I just put this on the chart. When you keep buying at this level, what are you doing? You are creating liquidity. where market might come back, take, and then push higher. All right. Market will come back there, take it, push higher. Same thing with this area. If you mark here, for example, as area of resistance, as long as you are touching it so many times, it becomes a liquidity. Market takes and then move. On the downside, on the support side, market takes and then push. So you should not be part of the people who will be looking to buy at this level. Okay, if you bought here, you make money. You bought here, you make money. You bought here, you make money. Even with a long drawdown, let's assume your stop loss was not it. But if you end up buying here, all right, what happened? Price went lower than this level here. That is the liquidity I'm talking about here. And before you know it, price push higher. So do not be the trader that buys at this level. All right. Instead, there are ways you can trade support and resistance without you becoming liquidity for the smart money. Okay. And the last one here, it becomes a standard liquidity trap. As I said, it becomes a liquidity trap. So what I do instead, pay attention, because this is what will help you in the future when it comes to this year. I guarantee that you will be making consistent profit week in, week out. So what I do is, since the zone is difficult to know which level is broken, I simply use a single price as my support, and a single price as my resistance. So when price closes above my resistance, for example, I know that resistance is broken. And then when price closes below the support, I know that support is broken. Most of the time, the second candle will determine if we'll continue flying high or if this was just a fake out. But I don't want to talk about fake out. I simply want to talk about understanding the direction of the market. Because when the price closes above resistance, this is resistance, When price closes above resistance, most likely on that same time frame, price will push higher. How far it will go, I don't know. It all depends on the next resistance available. If it breaks that resistance as well, and I have price closing above it, if it breaks the resistance, price will continue pushing higher. Same thing with support here. When price breaks support, most likely it comes to retest, and then price will continue moving lower to the next support on the time frame I'm looking at. And when I'm looking at the time frames, I'm looking at daily, weekly, and monthly. Those are the time frame I use to understand that market has broken support or resistance, and markets want to reach for the next support or resistance area. Do you understand? So with this, with a single price, you can formulate a strategy. Like, for example, once price closes above this, I can say, yes, the market wants to go higher. But with a zone, it becomes so subjective. Is it above the wick? Is it below the wick? And thereabout. And then the question most of you are asking is, how do I know the single line? How do I know the single line? The single line is simply the opening price. For example, we have 3 different types of opening price. The first one is the reversal opening price, which is my best opening price. Okay, so looking at this diagram, I'll simply mark out a single line there from the opening price of the second candle. All right, the opening price of the second candle. This one is a bullish candle. This one is a bearish candle. Let me shade it. Let me shade it bearish. Let me turn it to red. Okay, so this is a bearish candle. This one is a bullish candle. I don't want to waste more time drawing on this chart. Okay, So what I do is I'll draw a line across it. That is my resistance. So if price comes to that level and breaks that level, I will understand that, yes, that level is weak to hold price to the downside. So what happened? Most likely, price will push higher. It might retest or it might go deep. All right. Those are advanced understanding, but it's easier to get. It might just be a retest. Sometimes it might go deep. That is how crazy the market is. But the main thing is you understand that the price will push higher. Okay? You understand that the price will push higher. The second type is the continuation opening price. Those ones I use it for, as the name implies, continue the trend. All right. So the first candle, second candle. Now remember, this candle have wicks. I'm not talking about the wicks. That's why I'm not drawing it here. I'm not talking about the wicks. I'm simply talking about the opening price of that candle. So when you have the first candle pushing up and the second candle, just simply draw a line. Now, in the case where the closing price and the opening price are not the same, in this case, closing price and opening price are not the same. What do? Because remember, most times you look at your chart or some trading instrument, you see that there are gaps. Market closes at price, let's say $2. Then it opens at $3. Whereas it's supposed to open at $2, because if the market is truly efficient, when price closes at $2, it should open at $2 the next day. But because of fluctuations and manipulations, the market may gap up or gap down. So when that happens, don't bother yourself. Go back to the opening price and then draw the original opening price. That should have been the original closing opening price and not the opening price you see on the candle. So this is the original opening price, or the efficient opening price. Call it the efficient opening price. So in this case, when market closes above it, when market closes above it, most likely price will push higher. Most likely price will push higher. Now, how do I know how to trade on this level? If market comes in, let me go back here. If market comes in and rejects, by rejection, that simply means it is only the wick that is on that line and not the body. Once the body appears on the line, definitely it has broken it. Now it comes in and rejects on that line. Most likely, what happened? Price will push to the downside, especially once you have rules in place to tell you that the direction is bearish, and you see things like this occurring, then you know that we are heading south. Same thing applies on the support side. I have price rejected that area. All right. Price rejecting that area. What happened? Simply means that that support is most likely to hold. And then when that happens, most of my analysis, whatever I look at for, will be to buy, especially if it's in line with my directional bias. Remember, I'm just showing you how you approach the original support and resistance using the opening price. All right. So I'm going to go to the chart to show you instances where all you need to do is to mark out a single price, one price. Because if I ask you how much did you buy your breakfast, let's assume you bought breakfast or you bought a donut, you are going to mention a price. You're not going to tell me you bought the donut, for example, at between $2 to $5. No, you're going to tell me a single price. So the same thing applies with Forex trading. So without wasting time, I'll go to the daily time frame, for example, because those lines are more effective on the higher time frame. If we do that in the lower time frame, You are going to have so many mixed signals. You can use that to maybe refine your entries and the rest. But what I want to show you is knowing that those levels are key and strong levels. So in this case, I'll simply use the chart, okay, and then look at it going upward. So if you can see here, a good example here is, you can see this is a reversal opening price. This is a reversal opening price. Let me put in the continuation opening price as well. Because prior to when price came in here, you don't know which of these levels we hold. All right. Let me draw in some key levels. Let me draw in some key levels here. All right. Let me just select only the reversal opening price. Because most times it's advisable you use the reversal opening price. So I want to explain something, so just bear with me, okay? Now, prior to this move here, all right, prior to this move, we have previously some strong levels. These are my levels of support now. These are my level of support here, all right? Good. So what happened? Market reversed here, rejected from this opening price. I'm just saying, it closes below. Normally, all these continuation opening price were support. The moment price closes below, what it tells you doesn't automatically means that the market will tank. No, because as at when the market was here, nobody knows, okay, that it will get here. Nobody. If I feel it will get here, maybe I have checked that my directional bias is bearish, which is something for another day. But 100% knowing that it will get here before it fly, nobody does that. Nobody knows. What you can do is you can follow the trend until it trends no more. So now, when the market rejected that level, it shows that it's a strong level. There are certain rules I put in place to know that the market will be going down. But what I want you to do is you simply look at that level. You can see market rejected, came back again, rejected. All right. What happened? The last reversal opening price that was holding price, okay, got broken. So when this gets broken, you should know that the next place is going to go to will be this level. So as you can see, a long candle came in. This came long wick, rejected. Are we not supposed to go higher? Yes. But the next candle broke it. Broke that level. That means price wants to get to this level. It got to that level, push higher. What happened again? Market rejected this. We were supposed to go higher, but what happened? Market closed below. As long as market is closing below key support level, that should send you a signal that we are going down. All right, that is another way you can use the opening price to determine your direction. I have a better way. All right. So if you want to learn this, just in case you want to learn the opening price, I have a free mini course for you. Link is in the description. Go there, sign up. It's for free. The only thing is that you'll be getting emails every day from Monday to Friday. Weekends, you use the weekend to do the homework because there are homeworks assignment within that free course. So your weekend, you can use that for the homework or you use it for back testing the ideas I bring to you from Monday to Friday. All right. So every day you'll be getting bit size of emails. The reason why I did that is because you tend to understand it better when it is not rushed. You are not being rushed a particular concept. You take it one by one, precept by precept, concept by concept. So in this case, price broke below this. You should know we should be heading to the next reversal opening price, which is this level here. But what happened here? You can see we closed below this. Our last reverse opening price was this man here. Price came up, yeah. Okay, but before then, we are going down. So, market closes below. Our entry should be any of this support. I don't want to talk about entry here. So, what I'm just trying to tell you is you trade support and resistance differently because you are not a liquidity in this case. You can see price came in sharply, moved back down. We have closure, closure, closure. We are closing below reverse opening price. That is a strong indication that we are heading lower. Price closed below this again. So where are we heading to? We're heading to this one. Okay, I wanted to explain this because the rejection actually started from this man here. It came back, it came down all to this way and then rejected. From this rejection alone, someone should not, you don't need a rocket scientist to tell you the market is bullish. All right. So from there, you can see price fails to close below this last support. And then what next? You'll be attacking the previous reversal opening price resistance. All right. We'll be attacking them. So immediately we moved from here. We push higher. We close. This was formerly support. It's now a resistance. It was trying to do its thing. All right. It was trying to do its thing. But the main thing is that at this point here, with the way I trade, there are ways I know that the market is bullish until it gets to the next support or resistance. So in this case, you can see on this particular day, price rejected. The following day, it closed above with indecision. What happened? The moment it closes above, you should be attacking the reversal opening price. Price push higher. There was a Quasimodo here. It closes above, close above this. That means we are moving to the next one. Price, let me use a magnet here. Okay. So now, in this case here, you can see that price closes above, but the next candle went back below. Support broken, resistance broken. No, resistance broken first, support broken. Then we have a rejection. This is our key things. Price rejected this level. Price rejected this. Oh, let me take off the magnet. Price rejected this. That should be, when you see things happening like that, when there's a rejection, I go to my rule book to see that rejection. Is it something I should be worried about? If yes, then I switch to bearish. If you want to learn the way I trade, just join the free course. And if you want to go straight to the mentorship, the link is there. All right. So rejection here. We started attacking. We started closing below. What are we closing below? Reverse opening price. We close below. We close below. Where are we attacking? We're attacking lower prices. All right. Until we get to this level. Until we get to this level. This is the last rejection we could see. Yeah. The last. So the same thing applies here. Price broke. Support broke, resistant, retest. Okay. Once you see that retest is very key. It's why when you see down, up, and then the down up did not give you any clue, but the third candle, check for rejection. Once it happens, you switch again and again, and you start going up like that. I don't want this to lead into a very long video, but the main thing is you can backtest this. You can backtest this, and then as long as that level holds, you ask yourself, this rejection now, we should be selling. But you can see sometimes if you are relying on this alone without any other rules, you sold, you get stop out. But that is part of trading. But most of the time, the moment it stops you and then it closes above, you should focus on buy. All right, you focus on buy and make sure that the levels are respected. Okay, you can see most of the levels here are respected, and that is how I trade. I don't look at a zone. You can see I didn't do something like this and then start say, okay, it has closed above this, is broken. There are no rules. It's subjective. You can argue with me that, look, why not call this one? Why not draw it like this? Why not draw it like this? No, there will be argument in terms of drawing those levels, those zones. But with a single price, you have nothing to worry about because there's precision in there. There's objectivity. When this happens, this is what you do. And that is how strategies are being created when it comes to forex trading. So if you have any questions regarding what you've seen here, put it in the comment section and I'll do my best to reply. I will do more videos to explain more on this and example of some trades that I took using this same strategy. We'll be getting more and more videos coming this year. So on that note, bye.